Here's today's Singapore Market Digest for Thursday, October 2, 2025. The STI edged higher intraday and traded around the 4,360 level on CFDs, marking a fresh zone near recent highs as safe haven appeal and soft local inflation kept sentiment resilient, while traders watched U.S. rate cut odds and tariff headlines. The Straits Times Index climbed to roughly 4,362 on October 2, up about 0.89% from the previous session based on CFD tracking, extending gains set in late September as the index hovered near an all-time high region, printed last month at about 4,375. The broader tone reflected Singapore's stability bid and mild inflation backdrop, even as global headlines on tariffs and policy moves kept risk appetite selective across sectors. Yangzijiang Financial will co-lead the restructuring of China's lithium materials, named Ningbo Shanshan, investing 1.02 billion yuan via a platform to acquire 223.3 million shares at 11.44 yuan apiece for a 9.9% stake. Total platform voting rights could be higher once the restructuring finalizes, aligning YZJFH with battery supply chain optionality. The stock last closed $1.18 before this update, down 1.7% on the day prior to the announcement. Investors will parse governance, timeline risk, and China credit dynamics versus potential upside if Shanshan's reorg stabilizes operations and value unlocks. CordLife flagged going concern assessment risks after Singapore's Ministry of Health issued a notice of intent for a one-year suspension following audit findings in July, requiring a halt to new cord blood banking and raising uncertainties on liquidity, deferred customer payments, and refunds if the suspension takes effect. Shares last traded at 21.5 cents before a halt on September 29, with trading slated to resume October 2. Early indications point to significant downside pressure as news hit, so focus turns to cash runway, remediation milestones, and any negotiated conditions with regulators. MM2 Asia applied for another 90-day extension to hold its financial year 2025 annual general meeting, pushing the deadline it previously had for October 29, 2025 to January 27, 2026, amid funding needs for audit work and complex accounting around the liquidation of cinema units like Cathay Cineplexes. The counter closed at 0.003 Singapore dollars, up 0.001 or 50% on the session before the filing. Near-term attention is on audit progress, creditor terms, and whether timelines stabilize with ACRA and SGX after staggered prior extensions. Capital Group's study shows first half 2025 dividends at 8.2 billion US dollars in Singapore, up 13.1% year-on-year after adjustments, with local banks the key driver. DBS lifted core quarterly payouts and added 15 Singapore cents capital return per quarter, while UOB and OCBC boosted headline totals via special dividends. The case for Singapore banks remains anchored by robust earnings, strong capital buffers, and steady distribution capacity, though investors should watch net interest margin drift, credit cost normalization, and any macro spillovers that could temper payout growth from here. Two forces stood out today: stability premium for Singapore assets near record STI levels, and stock-specific binary events creating dispersion beneath the index surface. The crucial takeaway is that headline resilience can mask idiosyncratic risk. Names tied to regulatory actions, restructurings, or audits can swing hard regardless of index direction, so position sizing and risk controls matter more than ever. Stay diversified across sectors and factors. Do not let a single special situation dominate portfolio risk, especially where cash flow visibility is in flux. For banks, dividend compounding remains a pillar, but model scenarios for softer net interest margins and credit cycle turns. Treat specials as cyclical sweeteners, not baseline. For special situations like YZJ Financial's Shanshan angle, demand a margin of safety for China restructuring risk and timeline slippage. Catalysts and governance clarity should be tracked with discipline. That's the scoop for the SGX today, Thursday, October 2, 2025. For real-time analysis and early signals a week ahead of public posts, the premium membership is just $3 a month. Think of it as daily foresight from Iggy's desk. Like, share, and drop a comment with thoughts on banks' dividend power and special situations. Every note gets read, and the next digest might feature that angle.